Broadcasting live from the Bloomberg Interactive Broker Studio in New York. Bloomberg 1130 to Washington, D.C. Bloomberg 99.1 to Boston. Bloomberg 106.1 to San Francisco. Bloomberg 960 to the country. Sirius XM Channel 119. And around the globe, the Bloomberg Business app and BloombergRadio.com. This is Bloomberg Business Week.
It's Bloomberg Business Week. Tim Stenevec in the Interactive Broker Studios in New York. If you want to go to space, well, you're in luck. There are a few ways that you can do it. You can pay $2.8 million, at least that's the going rate right now, for an auction with Blue Origin. That is, of course, Jeff Bezos' company. Or you can be Jeff Bezos, the man himself, who said this morning that he, along with his brother, is going to go to space next month. We're going to have the details on that in just a few minutes. In the meantime, Charlie Pellet, what's going on with the trading day?
What's going on? We've got Biogen surging. Its controversial Alzheimer's disease therapy has been approved by American regulators. It is a landmark decision that stands to dramatically change treatment for the debilitating brain condition. Biogen shares, they are surging right now. Checking Biogen up now by 42.2%. Japan's Eisai is working with Biogen on the Alzheimer's drug. The ADRs also up as well. ADRs of Eisai, they are surging now by just about 58%. It is a mixed day on Wall Street. Equities are declining. Treasury yields rising as investors weigh inflation risks and the potential impact of a minimum corporate tax that could enable foreign governments to impose levies on big U.S. companies. The S&P is down 10, a drop of 0.2%. The Dow down 160, down 0.5%. Nasdaq up 31, higher by 0.2. 10-year yield 1.63%. Gold up 0.4 to 18.99 the ounce. And a pullback for crude. West Texas Intermediate crude down 0.5%. 69.26 for a barrel of WTI. More than 3% of hospital beds in the U.S. were occupied by COVID-19 patients on June 5th. That is the least since March 14th of last year, according to the Department of Health and Human Services. But a major area of concern has been the number of teens being admitted to the ICU. Dr. Joshua Sharpstein is Vice Dean of Johns Hopkins Bloomberg School of Public Health.
You know, what we're seeing is that the variants that have emerged appear to be more likely to get kids sick and potentially get them sicker. And so, you know, the idea that, well, this is just a common cold in adolescence isn't necessarily true. And also, if you think about just in general how risk-averse we are for kids, we don't want our kids to face even a small risk of a catastrophic outcome. It really does make sense to vaccinate, given where we are right now.
The Johns Hopkins Bloomberg School of Public Health is supported by Michael R. Bloomberg, founder of Bloomberg LP and Bloomberg Philanthropies. Checking some of those vaccine stocks. Mixed bag. Right now we've got Pfizer up 0.1%. Its German partner BioNTech, the ADRs, they're up 5.6%. AstraZeneca, its ADRs, they're down 0.7%. Moderna out of Cambridge, Massachusetts, up 7.3%. Johnson & Johnson down 0.5%. I'm Charlie Pellet. Bloomberg Business Flash.
It certainly is. Thanks so much for that, Charlie. Well, there are a few ways to get to space. You can, of course, become an astronaut. You could pay millions of dollars to hitch a ride. Or you could be Jeff Bezos, who said earlier today on Instagram, of all places, that next month he's going to space when his company, Blue Origin, launches its first passenger-carrying mission. Let's get right into it with Ed Ludlow, who's the auto reporter and covers all things space and technology at Bloomberg News. He joins us from the Bloomberg 960 AM studio in San Francisco. Ed, you know, when you think about going to space and hitching a ride on a rocket ship, you maybe are saying, okay, well, I'll do it, but I don't necessarily want to be the first one. Jeff Bezos, not so much.
Yeah, I mean, you know, his Blue Origin company have done 15 consecutive successful tests, but all of those tests have one thing in common. They didn't carry any humans. So I was joking a bit earlier with our colleague Matt Miller. I don't know whether it's a case of putting your money where your mouth is or your mouth where your money is, if you know what I mean. This will be the debut passenger flight for Blue Origin. You have to understand what kind of a mission it is, though. Right. It's an 11-minute trip up to the Kármán line. That's around 62 miles above Earth, 100 kilometers. It goes through that launch sequence that we're familiar with Blue Origin and SpaceX, where it takes off and over the series of a few minutes, the capsule that the rocket's carrying separates. it has a brief period in low Earth orbit where it then kind of falls back down to Earth and lands safely with a parachute. So it's not kind of deep space exploration we're talking about. It will be Jeff Bezos, his brother Mark Bezos, and then the eventual winner of an auction. And the bid right now is at 2.8 million, but it's open until mid-June, at which point it becomes a one-off live auction. The highest bid wins. So you'd expect that number to go up, right? 2.8 million to go to space seems like a bargain.
It does, and plus to get a little FaceTime with Jeff Bezos, right?
Right, exactly.
Ed, I'm wondering specifically about the billionaire space race here. Richard Branson has Virgin Galactic. Of course, Elon Musk has SpaceX. How significant is it that Bezos is the first among the billionaires?
It's significant, and it's a complicated story because all of those companies, Virgin Galactic, Blue Origin, and SpaceX, they all have slightly different long-term aims, and they also have different success so far. So, as I said, Blue Origin has done 15 consecutive successful tests, but none of them carrying humans. So Jeff Bezos will be the first billionaire into low Earth orbit. But if you compare that with SpaceX's ambitions and what they've already achieved to date, they are significantly ahead, right? They've done more than 125 flights using Falcon rocket. They've done around 15 test flights of different heights and static fire tests with Starship. Their ambitions are much greater. By the fourth quarter of this year, they want to do a multi-day trip with the CEO of Shift4 Payments, for example, where he and some other passengers will literally go into orbit for a 24-hour period, if not longer. They aim to do, SpaceX is to do a lunar orbit by 2023 using Starship. That lunar orbit by SpaceX is even more ambitious than NASA's own ambitions to get real astronauts to the moon. And then in the middle somewhere you have Virgin Galactic, where their billionaire owner, Richard Branson, should be the first passenger sometime later this summer. But that's a different kind of trajectory that vehicle takes. It's more like kind of taking a leapfrog from a commercial jetliner, an aeroplane, into very low Earth orbit. So you have to kind of put that into context.
Ed, what's the ultimate goal for Blue Origin and how it's different from SpaceX and from Virgin Galactic?
Yeah, it's actually very much the same. I mean, their business is split up in the same way that SpaceX is, that they have the payload side of the business, rockets that carry things into space for third parties, and they have the space travel, the space tourism side. For SpaceX's part, a lot of what we see when we do these launches on a weekly basis, that is Falcon carrying Starlink satellites, or it's carrying payloads for NASA like last week. But their ambition is very clear. All of that stuff is secondary to human travel to Mars. Elon Musk has been really consistent on that. And it may be some time away, but he says that is the mission statement for SpaceX.
Ed, last question. If given the opportunity, would you do it?
I would. I have the same answer to this every time. I actually respect Elon Musk, who says that he would happily die on Mars, just not on impact. That's his quote, right? So he wants to make sure that the technology works to get there safely, and he doesn't die in a crash landing. And I would like to see some success before I sign up.
Okay, well, I'll be behind you. That's Ed Ludlow, auto reporter at Bloomberg News, joining us from the Bloomberg 960 AM studio in San Francisco. Let's get a check of world and national news with Nancy Lyons in D.C. Hey, Nance.
Hey, Tim, there is still no deal on President Biden's infrastructure plan. Senate Republicans late last week made an offer to the White House that totaled only a small percentage of the president's $2.3 trillion package. White House spokesperson Jen Psaki says that's nowhere near good enough.
The offer did not meet the president's bar of growing the economy, tackling the climate crisis, and creating new jobs. And I would remind all of you, both in our counteroffer, but then in a lot of your reporting, it's clear the president has come down by about $1 trillion.
Psaki says the president will be meeting with Republican Senator Shelley Moore Capito again either today or tomorrow. Amazon founder Jeff Bezos says he and his brother will fly into space next month. Jeff and Mark Bezos will join the highest bidder on the new Shepard suborbital vehicle operated by Blue Origin, the aerospace company that Bezos founded in 2000. He posted a video on his Instagram account expressing his excitement about the July 20th flight.
I wanted to go on this flight because it's a thing I've wanted to do all my life. It's an adventure. It's a big deal for me.
The launch will be about 2 weeks after the billionaire plans to step down as CEO of Amazon. A new Gallup poll shows Americans are getting back to normal life. The poll shows less than 1 in 4 people are completely or mostly isolating from those outside their home. That's down from more than 75% of folks back in April of 2020. More people are running to the store when they need to as well. 60% of people surveyed said they went to a grocery store in the last day. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries.
Thank you so much for that, Nancy. Tim Stenevec from the Interactive Brokers Studios. Joined now by Charlie Pellet. Charlie, they call this a Media Monday because Trump allies have acquired cable networks in family-friendly TV push. Discovery selling Great American Country to Hicks-backed group. The new company GAC Media is also buying the Equestrian Channel.
Indeed. Ride TV, that's a 24-hour channel dedicated to equestrian sports, and the effort being backed by the private equity firm of the Hicks family business. It'll be run by cable TV veteran Bill Abbott. Previously, Abbott was president and chief executive officer of Crown Media, which owns the Hallmark Channel.
Hicks Equity Partners, as you mentioned, they've been trying to buy, Charlie, right-leaning cable news channels, Newsmax TV, also One American News Network, this in an effort to create a stronger competitor, Fox News. That's according to a report from the Wall Street Journal from last year. Thomas Hicks Jr. is co-chair of the RNC and also friends with Donald Trump Jr. It speaks to the idea that there are many investors right now, Charlie, thinking that there is an opportunity to go after an audience that is even further right than Fox.
Indeed. And for Discovery, little more detail about this sale, all part of an effort to focus on the company's bigger cable channels and explore options for its less watched ones. According to a source, Discovery, by the way, slated to merge with Warner Media next year. It plans to turn its DIY network into the Magnolia Network. Company also owns smaller networks like Discovery Life, Destination America, and the American Heroes Channel.
The buyers of this network are calling themselves GAC Media, and they acquired it for about $90 million. That's according to a person familiar with the situation. This from Jerry Smith's story, available on the Bloomberg. As you mentioned, Charlie, GAC Media also acquiring Ride TV, the 24-hour channel dedicated to equestrian sports. Merger Monday in the media space. It's not going away anytime soon, Charlie.
Indeed, lots going on in the media world, and yes, we've got it all covered.
We do. For Discovery, it's part of a sale to focus on the company's bigger cable channels and then explore options for its less watched ones, according to a person familiar with the matter. This is Bloomberg.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
Bloomberg World Headquarters. I'm Charlie Pellet. Stocks continue to trade mixed. We've got the Dow, the S&P both lower. NASDAQ is advancing. Treasury yields are rising as investors weigh inflation risks and the potential impact of a minimum corporate tax that could enable foreign governments to impose levies on big American companies. S&P down 10, down 0.2. NASDAQ up 29, up 0.2. Again, the Dow down 145, lower by 0.4%. 10-year yield right now 1.56%. Biogen's Alzheimer's drug has been approved today, a landmark decision that stands to dramatically change treatment for the debilitating brain condition. Right now, Biogen shares, they are surging by 40.4%. Gold up 0.4%. West Texas Intermediate crude down 0.6, 69.21 a barrel. Some of the names reporting after the closing bell today include Coupa Software, shares up 2.6%, Stitch Fix up now by 5.9%, and Marvel Technology lower by 0.6%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
It certainly is. Thank you so much, Charlie Pellet. Well, a story in the upcoming issue of Bloomberg Business Week magazine focuses on what are called the sedition hunters, amateur internet sleuths who've turned Washington, D.C.'s insurrection on January 6th into the ultimate online manhunt. Joining us now is politics editor for Bloomberg Business Week, Amanda Hurley. She's joining us from Washington, D.C., and David Yaffe-Bellany, legal reporter for Bloomberg News, joining us on the phone from Washington. Amanda, it's hard to believe that it has been 5 months since the insurrection, and one thing that just stands out to me about it is how much video footage there was of the event, watching it play out in real time here at work, and then also afterward. And it turns out that this army of internet sleuths has used that footage to focus on finding and then sending to the FBI those who were responsible.
Yeah, that's right. As you said, there was no shortage of footage as well as photos and social media posts from that day. So, it was so much raw material for these, amateur sleuths to dig into and to kind of try to, piece together and cross-reference as they were trying to create their own picture of exactly what happened that day and tried to kind of identify some of the people responsible.
David, how successful have these loosely affiliated group of people been?
I think they've been very successful. I mean, the way I became aware of these efforts was I spend a lot of my days pouring through the arrest affidavits that are released every time somebody is charged for their involvement in the Capitol riot, and you periodically see the feds reference the sort of online manhunting efforts of these sleuths in those official court papers, saying we were able to put together evidence to identify this person because so-and-so on Twitter made this discovery. And so that's a sort of powerful testament to how successful these groups have been.
Well, as you point out in the piece, David, they don't have a perfect record when it comes to trying to identify people online. And you include an anecdote in your piece from the Boston Marathon bombers, and it's one that I remembered as well, of suspects being misidentified. What have they done to try to alleviate that risk a little bit?
Yeah, so I think as these sorts of crowd hunting efforts have sort of grown in maturity, as the internet has evolved over the last decade, you've seen people sort of develop rules of the road for these types of initiatives. And so some of the main Twitter accounts that kind of organize and mobilize sedition hunting work urge their followers not to actually post the name of anybody online. If you work out their name, report that directly to the FBI is what these groups advise. And, of course, there have been moments over the last few months where, sedition hunters have deviated from that and have misidentified people publicly. It's impossible to control everyone. But I think overall, the groups have done a pretty good job of stopping misidentifications from happening and sort of channeling these efforts in a more responsible way.
Amanda, what is it that motivates this group of people?
Well, it seems like they have somewhat diverse motivations. For some of them, honestly, being at a loose end during the pandemic, was part of it. People were at home, kind of cooped up. Some people were out of work. And this was a project that they could really throw themselves into. Obviously, people felt, I think many of them felt a strong motivation toward justice and the sense that, they wanted to see these people brought to justice. And I think one of them said, not just a token group either. We want to see them, everyone responsible brought to justice. So, some of them feel, I think, angry or more passionate than others, but it's a mix of motivations.
David, I was surprised to read in the piece the reaction that one of these online sleuths had after he used technology to identify a podcaster from Washington who was later charged for his role in the siege. This person pleaded not guilty, but the person who identified him had some sympathy for him.
Yeah, I think that's an unusual reaction. First of all, I think that most of the sedition hunters doing this type of work probably don't sympathize that much with the people that they're turning into the feds. But I think that particular case kind of illustrates the sort of intimacy of this kind of work. When you're tracking somebody online and learning as much as you can about them in order to figure out if they're actually the person in the photo, that's a kind of sort of intimate experience, and you might get a sense of them as a fuller and more nuanced individual than you would if you just read the court papers describing what they've done on January 6th at the Capitol. So I think that's a little bit explains what was going on there. It's also certainly the case that these people, the sort of online sleuths, understand that, there were sort of bigger forces at play motivating the people who went to the Capitol. And a lot of them lay more blame at the feet of President Trump and his allies than they do at the individuals who actually showed up. So I think it's that kind of combination of factors which produces that sort of surprising reaction.
David, you mentioned that the court papers that you looked through sometimes cited these folks who have spent so much time online trying to identify these insurrectionists. And I'm wondering how law enforcement officials feel about that.
I think they're grateful. When you talk to the FBI or the U.S. Attorney's Office in Washington, they're constantly banging the drum of we need tips from the public. We need the public to help us as much as they can to identify these people, because this is an investigation of really unprecedented scope. And there were so many people who showed up at the Capitol that day that any help the government can get, I think, is really appreciated. Obviously the government has investigative resources that an ordinary person doesn't have, but there were still so many people involved in the investigation, so complex that the help of this sort of crowdsourcing effort is pretty important.
Amanda, I just want to end talking a little bit about what the vice president of the ADL, Orrin Siegel, told David, that it could potentially set up a dangerous precedent here. What did he mean by that?
Yeah, I think touching on what you and David were talking about earlier, about the potential for misfires,
yeah,
right? And for, putting people's personal information out in the public domain. And, because of the unwieldy power of the internet, you sort of never really know what's going to happen. And it can definitely expose people to risks, whether they're, guilty or innocent.
Right.
So you just have to be really, really careful about that.
Well, it's a fantastic story, and it's available in the upcoming issue of Bloomberg Businessweek magazine. Amanda Hurley, politics editor at Bloomberg Businessweek. David Yaffe-Bellany, legal reporter for Bloomberg News. As a reminder for all of our listeners working from home and elsewhere, Bloomberg Radio is available on all of your favorite apps: Bloomberg Business, iHeart, SiriusXM, TuneIn, as well as Bloomberg.com and on the Bloomberg Terminal by typing RADI GO.
Headlines and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
Bloomberg World Headquarters. I'm Charlie Pellet. We move into the final hour of trading with the Justice Department saying it will be discussing developments in the investigation into that ransomware attack on Colonial Pipeline last month that temporarily halted fuel supplies across the East Coast. Officials will be discussing the attack just about 14 minutes from now. A source, meanwhile, tells Bloomberg that the U.S. has recovered millions of dollars in ransom from those Colonial Pipeline hackers. Again, a news conference at the Justice Department coming up 3:15 Wall Street time. Equities are trading mixed right now. The S&P is lower as we move into the final hour of trading on this backward Monday. Treasury yields rising as investors weigh inflation risks and the potential impact of a minimum corporate tax that could enable foreign governments to impose levies on big American companies. Investors, though, do remain data-focused as we hear from Bruce Kasman, chief economist at J.P. Morgan Securities.
On the spike that we're seeing, there's definitely some problems in terms of companies adjusting supply to demand. That's the bottlenecks you see in the semiconductor, that's the used car prices. There's a bunch of those forces that are pushing up inflation, which is not great in terms of what we would like to see. The other side of this, though, is that we are seeing price normalization in what are depressed levels of service prices as we're seeing activity picking up.
Biogen has received approval for its controversial Alzheimer's disease therapy, a landmark decision that stands to dramatically change treatment for the debilitating brain condition. Biogen shares up now by 40.2%. Japan's Eisai is working with Biogen on the Alzheimer's drug. Its ADRs are also surging today. Right now, we're looking at a gain of 53.4%. 10-year yield 1.56%. Gold up 0.4. West Texas Intermediate crude down 6 cents. I'm Charlie Pellet. That's a Bloomberg Business Flash.
This is Bloomberg Business Week with Carol Masser and Bloomberg Quick Takes Tim Stenovic on Bloomberg Radio.
It certainly is. Tim Stenovic here, coming from the Bloomberg Interactive Brokers studio in New York. I'm joined now by Andy Brown. He's editorial director at Bloomberg New Economy. He joins me here in the studio, and his latest column focuses on China's pandemic image problem and the growth of it. Andy, what is the image problem that China has right now, post and during pandemic?
So China's global reputation is really in tatters, and poll after poll shows that China is less trusted, less loved, less admired than it used to be. And a big part of the problem is its handling of COVID-19. And sort of that's the broad background. And into this now, has been injected serious questions about whether or not COVID really was something that jumped from animals to humans, or whether it was gross negligence, the result of a lab leak. And this lab leak theory is now really gaining traction.
When you say it's really gaining traction, and you refer to this in your recent piece, the Biden administration is looking for answers, as well as the international community.
Well, that's kind of it. You see, I mean, early on, the White House under Donald Trump came up with this idea that it could have leaked from a lab, and it was sort of rather too easy to say, oh yeah, right, it was just another.
And
this is just
on,
another
it was
conspiracy.
really pushed aside.
Right? Yeah. And then Mike Pompeo, the then Secretary of State, started running with this and, embellishing the lab leak theory. But now, even scientists, well-respected, neutral scientists with no political axe to grind, who first of all came out and said, look, it's highly unlikely that it could have come out of a lab, they're now starting to have second thoughts.
So, Andy, what are the implications of China's image problem?
Well, it's really huge, and frankly, it goes well beyond a simple image problem.
And look, the reason I asked the question is because there are American businesses that don't agree with a lot of what China is doing inside China and outside of China. but they will do business there.
Right. So, look, you know, you don't actually, there is no smoking gun here in a sense. A lot of this is circumstantial, but you don't actually have to come up with a smoking gun. All you have to do, if you're in the Biden White House now or in the intelligence service, is sow enough doubts in people's minds about where this thing came from. And that very quickly changes the image and perception, global perception of the Chinese government. It undermines their credibility. Domestically, it certainly goes to the credibility and you know, of the Chinese regime itself. Then you have the issue of reparations. Can you trust? You know, in the end, the global community would be asking, can you really trust a government that inflicted this virus on the world, if only by accident, right? 3.5 million people killed, trillions of dollars destroyed, people's lives, livelihoods obliterated. And if you could somehow lay that at the feet of the Chinese government, that's huge.
Andy, I hate to cut you off. That's Andy Brown, editorial director at Bloomberg New Economy. Let's go now to our colleagues at Bloomberg Television who are standing by with the CEO of Biogen.
Talking about that breakthrough for Biogen, the spillover effect for plenty of the other companies, competitors, as the FDA, of course, says yes to the pharmaceutical company's Alzheimer's therapy in a landmark decision for Biogen that could dramatically change treatment of the debilitating brain condition. Now to our radio audience, our TV audience, we're looking at shares of Biogen jumping to a record high after resuming trading earlier this afternoon. For more, we really want to be sitting now with the CEO of Biogen. Michael Vanoutsas is with us. We're pleased to welcome him. And thank you so much for spending some time with us, Michel. I'm interested, first and foremost, in the landmark nature of this. How much, Michel, did you think, were you surprised by this accelerated decision of the FDA?
Thank you for having me. And first, I would like to say that it is a day we'll always remember. And I want to applaud the Biogen team for their resilience, for following the science all the time, and their humility because, neuroscience is complex. It's not easy. And, we were not that anxious because we did follow the science since years and on this very specific program since, many years, since 2007, if I'm not mistaken. Yeah. So it's an important day. It's an important day for the patients, for the caregivers, for the families. For almost 2 decades, there was no innovation in that space. Look at how the world has evolved during 2 decades, not for the patients. Today, it's a new start. Today, we're opening a new chapter, and I'm delighted to be in a position to have the honor and the responsibility to do it well.
All right, well, let's talk a little bit more about that responsibility. First of all, congratulations to the company. And of course, this is an encouraging sign for all of those people suffering from Alzheimer's and of course their families who have to suffer alongside them, Michel. But there's also a lot of work here for you to prove that not only is this treatment effective, but it's also safe.
So nowadays you have, 3 treatments that have shown that binding characteristic to the amyloid plaque that is toxic around the brain and accumulates over decades. The way a plaque is toxic in the heart, we are able to penetrate the brain and gradually remove the plaque. And this is critical. And now there is not only aducanumab, there are 3 compounds. The next compound in the line is the one we have in collaboration with Eisai, that is BAN2401, that is now in phase 3, for which the phase 3 readout will be in a bit more than a year from now. So the FDA has done a thorough analysis of the entire data set. We had more than 2 million pages of scientific data being shared with the US regulator, having the efficacy and the safety profile thoroughly evaluated.
I understand that, Michel, but there's also pushback by some scientists who question whether amyloids themselves are actually sort of the key to solving Alzheimer's. So you have a drug that may be successful in targeting those amyloids. How confident are you that that really is the problem that needs to be solved?
Well, it removes gradually the underlying cause, the pathophysiology of the disease. down the road, there might be additional hypotheses, but this will take many years before we can see the scientific proof. And as I was just saying, today you have 3 compounds with similar activity, and we are the first one in the market. In a few years, there will be others, and we invite them because the market is so large.
Talk to us about the pricing strategy. Of course, you're saying that it's about $56,000 a year for the cost. For an average consumer, including the multiple year visits for a transfusion, required MRI scans, what would it cost the average consumer?
I think, to get things in perspective, we need to consider that the starting point is a $600 billion that society is spending in direct and indirect cost on this disease in the US only, and that the epidemiology is planned to triple by 2050. So yes, there will be some investment finally on treatment, on diagnosis, and I wish that we have diagnosis reimbursed soon. And technology is progressing very fast in that space, and I hope that soon we'll have also a blood diagnostics that will help, that will ease the broader population to have a biomarker in addition to the clinical diagnostic. This is important.
Michel, of course, we are a global network. You are a global man. You've led businesses over in Europe, in China. I'm sitting here just flying back from the UK a week or so ago. I think of this FDA approval and the knock-on effects globally. 6 million afflicted by Alzheimer's here in the United States, but this is a global issue for many a family. Do you think that we'll see other decision makers, other regulators look at the decision made in the US and fast track too?
I believe so. I believe so because the US FDA is so important, and they are the one that I worked the most on the global data set since more than 2 years. But we are also with a similar level of scientific engagement and respect, working with the Europeans, with EMA, with Japan, with Australia, with Canada, with Switzerland, with Brazil, where the product is filed and currently under review. And our aim is to make the product available everywhere.
With regards to the pricing and with regards to the availability, Michel, do you start to see any time in the near future where that price would meaningfully come down?
So it's too early to speculate. We will be working. We are very obviously engaged, and we are prioritizing sustainability for the system with our biosimilars, our responsible price increase, and everything we do. And we'll be working very closely with Medicare and CMS in order to monitor very closely what it means in terms of drug adoption, in terms of drug utilization. And we committed not to take price for the next price increase for the next 4 years. This is almost, we didn't see that often, certainly the first time for our company. And I believe it's a big commitment. And in addition, obviously, I've asked my team to plan for the most equitable launch ever. We are partnering with CVS. We are learning from the latest pandemic, and we want to secure that the underserved population, but also those who have a higher incidence risk, the Latinx, the Black, African American, have the same chance for diagnosis and access. This is critical.
Wonderful comments, and again, congratulations on that FDA approval. Michel Vounatsos, Biogen CEO. You guys, some of the latest headlines from Truist Securities just won $846 price target, and some of the most
there you have
bullish
it.
cases.
The Biogen
CEO,
CEO, Michel Vounatsos, joining our colleagues on Bloomberg TV. Biogen shares higher by more than 40%. Its controversial Alzheimer's disease therapy approved by U.S. regulators. This a landmark decision that stands to dramatically change treatment for the debilitating brain condition. The company's CEO telling Bloomberg TV just now that it's too early to speculate on whether the drug's price will drop. It does cost more than $50,000 for treatment, but there is hope for a blood test soon for Alzheimer's, the company's CEO says. In the meantime, let's get a check on the latest with the trading day with Charlie Pellet. Hey, Charlie.
Well, you heard it live right here on Bloomberg Radio. The FDA granting the antibody therapy from Biogen accelerated approval, which means Biogen will need to conduct more research to establish the drug's benefits for it to remain on the market. market, but a big day for Biogen. Shares up right now by 39.67%. Michelle Donatis, the CEO, interviewed moments ago right here on Bloomberg.
It's an important day for the patients, for the caregivers, for the families. For almost 2 decades, there was no innovation in that space.
And at one point, we did have Biogen shares up by 64%, climbing to a record. Stocks are trading mixed. We've got the Dow and the S&P. They are both lower right now, with the S&P down 5, a drop there of just about 0.1%. Dow Industrials down 141, a drop there of 0.4%. NASDAQ up 60, up 0.4. 10-year yield 1.56%. Gold up 0.4, $18.99 the ounce. And West Texas Intermediate crude down 0.5%. WTI 69.25 a barrel. The other developing story right now, the U.S., according to sources, has recovered millions of dollars in cryptocurrency ransom paid to the perpetrators of that cyber attack on Colonial Pipeline last month that temporarily halted fuel supplies across the U.S. East Coast. Again, that according to sources, Justice Department scheduled to be saying more about the recovery at this hour. So again, recapping, we're looking at a mixed day here. The Dow, the S&P lower, NASDAQ higher, S&P down 5, a drop of 0.1%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
It certainly is. Thank you so much, Charlie Pellet. Well, barely a week after the murder of George Floyd last year, Softbank created the Opportunity Fund. This was a commitment to invest $100 million in companies led by underrepresented racial minorities. And here we are, a little over a year later, and Softbank has already allocated half of the cash, and the company anticipates creating a second fund by the end of the year. Joining us now is Sarah McBride, a venture capital reporter at Bloomberg News. She joins us on the phone from San Francisco. Sarah, I was just reading from your story right there about Softbank's Opportunity Fund. What are the companies that it's so far committed to supporting?
Well, it has a bunch, and they're super diverse. In its portfolio are tons of companies from all around the country. There is a healthcare company that I spoke to for my fund. There's a company that develops software for people operations called Gather. There are some education companies, really anything you can imagine in a diverse venture capital fund, the difference being that all the founders represent minorities that have had trouble attracting venture capital traditionally.
Yeah, and these are minority entrepreneurs traditionally, as you point out in your piece, have rarely had access to seed capital. You have this statistic that is absolutely startling here. Of those who received venture capital from the years 1990 to 2016, only 4.2% were Black or Hispanic. That's according to a Harvard Business School study. Does it look like that it's getting any better?
I have to say, given all the initiatives that started last year, it has to be getting better. The reason I looked at this a year later was I wanted to make sure that it wasn't just talk, that all the people who had come out and promised to focus on this issue were, in fact, doing so. And I'd say that spending down or allocating half of a $100 million fund in a year is a really good sign of progress. They weren't the only ones. They were just the largest. And I checked up on some of the others that also appear to be following through on their promises from last year. So I think a difference is being made. And SoftBank told me, I spoke to its partner, Shu Niata, who's taking the initiative on the Opportunity Fund, and he told me he thinks the biggest difference can be made at the seed and Series A stages. In other words, the very earliest stages, and that by giving money to such young companies, they hope that it'll make a difference down the line. So I think we'll only be able to measure success in a few years, but there's a big effort.
Yeah, and as it goes with venture capital, right? The idea that is and look, and this is the idea with venture capital is you support a lot of companies early on in their development, and by definition, many of them will not work out, and it's the home runs that end up being grand slams, right?
Exactly. One of the more interesting firms that I spoke to comes out of Atlanta. It's called Collab Capital, and it's led by investors, including Barry Gibbons. And he was taking a non-traditional spin on venture capital and saying, look, the problem with under investment in Black-run firms isn't just the companies that aspire to be unicorns and grow into billion-dollar businesses. It's also just regular businesses around the neighborhood. They're having trouble getting capital too. So he's, for his firm, taking a look at companies that maybe aspire to just have a few $1 million in revenue too, and also allocating money to them and just accepting some of the companies in my portfolio will never grow to be unicorns, but we need those companies too, which I thought was a great approach. His fund is $50 million.
You also allude to the possibility of creating a second fund by the end of the year. Talk a little bit about that.
Yeah, so at Softbank, they feel that it's going pretty well, that they're making a difference. They've found all these businesses to invest in, and they want to raise more capital to keep going down this path. So they can either get that just from Softbank or work with other companies that also have this commitment. And so they're exploring opportunities now and thinking about, should we bring in other corporates or other interested parties? Should we keep just doing it on our own? And I think we'll have the answers to these questions by the end of the year.
Yeah, and I wonder, too, about other venture capital firms and other venture capitalists doing something similar. You talked a little bit about those.
Right. So there's, for example, the Collab Capital that I mentioned, and then there are some other initiatives. Lawrence Lenehan out of New York is running funding just for Black entrepreneurs who are interested in fashion, for example. That initiative is going ahead. There's Define. There are a bunch of others, as well as initiatives to focus on getting more historically Black colleges investing in these funds, some of which have really good returns, and endowments of these institutions haven't traditionally invested in venture. So it's happening on both ends.
So that speaks to your point of whether or not Softbank is going to tap its outside connections to raise the money or use the part of the coffers that it already has.
Right. So Softbank is one of the biggest companies in the world. It has unlimited coffers. So it could just keep funding it itself, or it could bring in other corporates, which could have strategic advantages for the companies that enter the fund that they're backing. Because right now, these young companies, I spoke to a couple of them, are just bowled over by all the doors that Softbank can open for them, mostly other companies in the Softbank portfolio. And if other corporates were doing that too, it could be great for some of these young companies.
We'll talk a little bit about that because, raising money, especially from Softbank, and you're the venture capital reporter here at Bloomberg News, so you're the best person to speak to about this. It's much more than just a venture capital firm providing funding to a company. Venture capitalists make introductions. They connect them with other portfolio companies. They can help get them really good employees. I mean, what is the role that a venture capital firm takes in 2021?
Right. So I spoke to a company called Vitable, which is a healthcare startup based near Philadelphia. So for this founder, it wasn't just the cash. He spoke to me at length about the introductions Softbank's making. So Vitable is trying to create more access to healthcare insurance for people who don't have a ton of money to spend on healthcare, and they are using online healthcare and home visits by healthcare providers, so creating a network of providers. So Softbank was able to introduce him to executives from the insurance company Lemonade, which is also in the Softbank arena, and they spoke to him about insurance and building up insurance programs. He got to speak to GoPuff, the delivery startup, about creating a network. And also one of the investment partners at the Opportunity Fund is Stacey Brown Philpott, the woman who used to run TaskRabbit. So he got to speak to her as well. And that's just invaluable for a young company.
Yeah, and I encourage everybody to check out Sarah's piece. It's called Softbank Fund puts $50 million in Black and Latinx-led startups. Sarah McBride is venture capital reporter for Bloomberg News. She joins us on the phone from San Francisco. Well, we got much more coming up in just a few minutes, including the song of the day and Dave's chart of the day. This is Bloomberg.
Broadcasting live from the Bloomberg Interactive Broker Studio in New York. Bloomberg 1130 to Washington, D.C. Bloomberg 99.1 to Boston. Bloomberg 106.1 to San Francisco. Bloomberg 960 to the country. Sirius XM Channel 119. And around the globe, the Bloomberg Business app and BloombergRadio.com. This is Bloomberg Business Week.
It's Bloomberg Business Week. Tim Senovec here, coming at you from the Bloomberg Interactive Broker Studios in New York. It is that time of day, under a half hour until the markets close. We are going to get Dave's song of the day, his chart of the day, and yes, his stock of the day in just a few minutes. In the meantime, let's get a check of that trading day with Charlie Pellet.
Thank you very much. It is a mixed day right now. Stocks are trading mixed with the S&P, the Dow lower, and NASDAQ is advancing. Lots of other developing stories, though. Sources tell Bloomberg the U.S. has recovered millions of dollars in cryptocurrency ransom paid to the perpetrators of that cyber attack on Colonial Pipeline last month that temporarily halted fuel supplies across the U.S. Right now, the Justice Department is holding a news conference. Big news out of Cambridge today. Biogen shares soared after its controversial Alzheimer's drug therapy was approved by U.S. regulators. Biogen shares, they're up now by 40.4%. Michel Vanatskos is the CEO of Biogen. He was interviewed right here on Bloomberg Radio and Television.
For almost 2 decades, there was no innovation in that space. Look at how the world has evolved during 2 decades. Not through patience. Today, it's a new start. Today, we're opening a new chapter, and I'm delighted to be in a position, to have the honor and the responsibility to do it well.
More than 3% of hospital beds in the U.S. were occupied by COVID-19 patients on June 5th. That is the lowest since March 14th of 2020, according to the Department of Health and Human Services. A major area of concern, however, has been the number of teens being admitted. Dr. Joshua Sharfstein is Vice Dean of the Johns Hopkins Bloomberg School of Public Health.
I'd like to see there to be so much vaccination that really the number of cases and the risk is hopefully, about an average flu season or less. I mean, that would be, then you could kind of treat it like the flu, but we're not at all near that point. The projections are that if we don't vaccinate more people, we will have many, many more people sick and a lot of people dying, far in excess of the flu.
The Johns Hopkins Bloomberg School of Public Health is supported by Michael R. Bloomberg, founder of Bloomberg LP and Bloomberg Philanthropies. Among the vaccine names, Pfizer down 0.1%, its German partner BioNTech. The ADRs up 4.4%. ADRs of AstraZeneca down 0.6. Moderna up 7.5%. Johnson & Johnson down 0.7. 10-year yield 1.56%. Again, the S&P lower by 4, down 1/10. I'm Charlie Pellet. That's Bloomberg Business Flash.
Thank you, Charlie Pellet. This is Bloomberg. There we go.
That could be the Federal Reserve. Think about it, Tim.
Okay, could it?
They're flying from the corporate bond market.
I like it.
Yeah, absolutely.
Fly away.
Last year, they bought all these corporate bonds and bond exchange traded funds to help the market, as the coronavirus pandemic unfolded. And as of today, the Fed has started a process of getting out of those investments, which, as of last week, you were talking $13.7 billion, mostly in ETFs, 16 of them to be precise. And so the chart basically shows, which ETFs the Fed has stakes in and how big they are, relative to the size of the fund in the sense of the shares outstanding. And maybe the most noteworthy one is what they call the iShares iBox U.S. Dollar Investment Grade ETF. I know these things have ungodly long names, but the ticker there is LQD, and for a lot of investors, that's perhaps more familiar. So the chart actually includes the ticker symbols along with the names. The Fed is the third largest shareholder, or at least was. Maybe they've started selling already, who knows? But third largest shareholder of the LQD exchange traded fund. You're talking $2.4 billion of shares and a 6% stake. And there's only one other fund where they have a bigger percentage of the stock that's outstanding, specifically something called the Spider Portfolio Intermediate Term Corporate Bond ETF. The ticker there is SPIB. So, it's just something to keep track of as we watch this process unfold. Does the Fed succeed in its effort not to move the market when it gets out of these ETFs? Considering, the size of the holdings, at least in those two cases and beyond. If you want to know more, folks, send me an email. I'll get you the chart, the explanation that goes with it, and everything I do going forward. The email address is dwilson@bloomberg.net. That's dwilson@bloomberg.net.
Dave, is there any precedent for this that we can look to that would indicate what could happen?
Not in terms of central banks here in the U.S. I mean, you look around the world, there are certainly central banks that have bought not only exchange-traded funds, but, individual shares. I think of the Bank of Japan as one example there. But, we really kind of haven't seen them back out the way that the Fed is talking about. And bear in mind, they're starting with these ETFs. You're talking $6.8 billion of assets, and then they're going to move on to individual bonds, which may be, by their very definition, a bit harder to sell.
Dave, before we let you go, give us a preview of your stock of the day.
Absolutely. It's a company called Next Decade. It's involved with liquefied natural gas exports. I mean, you're talking about a stock that has a single-digit price tag. That said, Morgan Stanley raised its rating today to the equivalent of buy from hold and tripled their 12-month price projection to $6. And that got people's attention. Next Decade, the ticker Next, surprise, surprise, NEXT at the moment, up 45%. And, trading at its highest price of the year.
45%. Look at that. $3, higher by more than $3.50 so far this year.
Well, now that is the price. It's up by a little more than $1.
It's up by a little more than $1. Thank you.
Yeah.
And it's up this year by close to 70%.
Yeah, that's the thing. Percentages are always kind of a little skewed when you look at low-price stocks, and certainly Next Decade qualifies.
All right, Dave Wilson's going to have his stock of the day just at 4:15 p.m. Wall Street time. You can see it on Facebook, on LinkedIn, and, of course, on Twitter. Dave Wilson is stocks editor right here at Bloomberg News. Well, we are just about 21 minutes away from the market close, and we're going to have that for you as it closes. In the meantime, let's get a check of the world and national news with Nancy Lyons in D.C. Hey, Nance.
Hey, Tim. Government officials say they've retrieved millions in ransom money that Colonial Pipeline Company paid in cryptocurrency to hackers who shut down the major pipeline and caused a gas shortage on the East Coast last month. Deputy Attorney General Lisa Monaco has a message to all U.S. corporations.
The threat of severe ransomware attacks pose a clear and present danger to your organization, to your company, to your customers, to your shareholders.
Monaco says the U.S. will do its part to improve resilience in the nation's infrastructure. Secretary of State Antony Blinken has been outlining to lawmakers today his budget for next year, which would allow the hiring of 500 more staff and expand worldwide aid and diplomacy. Bloomberg's Irv Chapman reports.
The Secretary was asked about the need to evacuate Afghan translators and other workers who could be killed by the Taliban. He said when troops leave, embassy and aid workers won't.
If there is a significant deterioration in security, I don't think it's going to be something that happens from a Friday to a Monday. I wouldn't necessarily equate the departure of our forces with some kind of immediate deterioration.
Secretary Blinken said there are 18,000 Afghan helpers who could seek to leave their country with their families. In Washington, Irv Chapman, Bloomberg Radio.
The Supreme Court says for now it'll be up to Congress, not the court, to decide whether to change the requirement that only men must register for the draft. It's one of the few areas of federal law where men and women are still treated differently. Global news 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Nancy Lyons.
Thanks so much for that, Nancy. Tim Stenevec in the Interactive Brokers studio in New York. I'm joined by Charlie Pellet. Charlie, another day, another SPAC.
Indeed, this one involving the airline industry. We're talking about Breeze Airways here. Labor unions asking the federal government to review its approval of Breeze Airways to operate in the U.S., citing concerns over the discount carrier's recruitment and employment policies.
Yeah, sorry, I should apologize. I was looking at a different story that we were going to hit on a little later in the show. That's right. Breeze Airlines, as you mentioned, the union saying that Breeze, the upstart domestic carrier founded by airline entrepreneur David Neeleman, violated age discrimination and diversity statutes with a plan to hire flight attendants solely through a tuition reimbursement work-study program with Utah Valley University. Charlie, there was a great Bloomberg Business Week story earlier this year all about David Neeleman and Breeze Airways. And this is a guy who knows a thing or two about airlines. He's the guy behind JetBlue, in addition to other airlines. And this is one way that he was planning to keep costs down.
Indeed, one of the most fascinating people in the aviation industry. You mentioned JetBlue, but also Brazil's Azul, along with other carriers. And part of what he's done over the years is simply come up with low-cost strategies, ways to do it better. But this plan ran into a lot of pushback, indeed getting a lawsuit alleging that he and Breeze violated air discrimination and diversity statutes because they wanted to go through that work-study program at Utah Valley University.
Breeze began flying back on May 27th. The initial network has 16 cities, but it dropped its plan to rely exclusively on students as young as 18 as flight attendants because it didn't actually produce enough job applicants. It said at the time that it would continue the program with UVU in combination with posting openings more broadly online.
Indeed, and again, a fascinating pioneer in the aviation industry, and going to be very interesting to see how this latest project, the latest airline from David Neeleman, pans out.
Yeah, it really will. I mean, it's a wild time, Charlie, to be launching an airline in the midst of a pandemic, but Neeleman, along with several other people, do think that they can pull it off. This is Bloomberg Business Week, and this is Bloomberg Radio.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
Afternoon call. Here he is, Bill Maloney.
And good afternoon, Charlie. That's right. U.S. stocks trading mixed today with the Dow currently down 153 points. S&P's dropped 7. NASDAQ is higher by 52. The U.S. 10-year yield at 1.57%. Gold is up 8 and transports fall 37 points. Among the main 11 S&P sectors, real estate and healthcare led. Materials were under pressure. And leaders to the upside in the Dow, Boeing and Microsoft, while Dow Inc. and Caterpillar led to the downside. In deal news, Nucor to buy Cornerstone Buildings Brands unit for $1 billion in cash. And other news, Biogen soared as much as 64% intraday after FDA approval. And Amazon is set to be covered by the global digital tax despite thin margins. Wrapping things up, Vail Resorts and Marvel Technology report after the bell. Live from the First to Breaking News Desk, I'm Bill Maloney. Charlie?
Okay, we thank you very much, Bill. And to hear live breaking news over your Bloomberg Times Squawk, SQUAWK on your terminal line. Charlie Pelopans is a Bloomberg Business Flash.
I'm driving in my car. I turn on the radio.
How about you let me drive?
Oh, no. Who's gonna drive you home?
Honey, please, I'll do the driving.
Drive on.
Excuse me, I want to drive.
Just drive, baby.
It's the question that drives us.
This is the drive to the close.
That funky music will drive us till the dawn.
On Bloomberg Radio.
Indeed, it is 3:49 on Wall Street, just over 10 minutes until the markets close on this Monday, June 7th. Tim Stenivek with Bloomberg Business Week. And joining us now is Jay Littman, the co-founder and president of Ethic, approximately $1 billion in assets under management. Jay joins us again on the phone from New York City. Jay, it's great to have you back on the show. How are you doing?
Tim, fantastic to be here.
Thanks for joining us today. June kicks off Pride. And we wanted to have you on the show because Ethic is a sustainable asset manager, and you're doing something in honor of Pride Month. You're helping investors allocate capital toward companies that are supporting LGBTQIA+ communities. How are you doing it?
Well, here at Ethic, we work with investors to help them align their portfolios with the biggest priorities that they feel matter to them. So that can be things like climate, deforestation, human rights, racial justice, but LGBTQ+ is a huge priority for so many of our investors. And so we use data to understand, fundamentally which companies in our portfolios are either hurting or helping this community, either through the way that they treat their employees or their communities, or through the products that they sell and how they actually go about selling them to the broader world. So we look at a number of different issues and factors to understand which companies are going to be on either side of that equation, and then look to build a portfolio to reflect that.
So what are the companies that do support this?
Well, it's companies that are making an explicit commitment to actually putting things like anti-discriminatory behavior in their policies and procedures, right? As it currently stands in the US, over half of the states in this country don't actually provide explicit protections for the LGBTQ community, which means that it is actually up to companies, many of the companies in our portfolios, to actually come out and explicitly tell their community, their investors, their employees that this is something that they prioritize and this is something that they are going to put in their documentation to ensure that bias in the hiring, firing process, in promotions, in compensation is not something that's going to be taken on at those businesses.
And what are some companies that aren't doing this? I mean, can you talk about individual companies that you find that would not meet the rubric?
We don't typically name specific companies in this format, just from a compliance perspective, but we can talk about a lot of the behaviors.
Talk about those.
No, of course. I mean, it's not just, the internal policies with employees. What we seek to understand is all of the behaviors that companies actually have that can, again, help or harm this community. And, some of those things are more obvious, like anti-discriminatory policies and procedures, whether they have protections for domestic partners providing equal benefits, whether they have, additional benefits for the trans community, for additional, medical coverage that may be required. But there's also, things that these companies do that might seem innocuous that are highly important to, solving this issue, right? So something like data security and privacy, right? That may seem really unrelated, and it may seem really innocuous as it relates to this. But if you think about the fact that, 10 to 12 to 15 countries around the world actually make it punishable by death to be a member of the LGBTQ community publicly, it means that individuals in those countries are most likely living privately, most likely keeping this part of themselves secret. And if they are living privately, and if they're living, online and being this part of who they are online, then if that information is hacked, if it is leaked, then it is a matter of life and death. So what companies actually have good enough data security and privacy to protect this information and ensure that, this community in those countries is actually protected and safe?
What about investor demand for a product like this? What was it that made you realize that this was an opportunity for Ethic?
Well, a really important part of our process in working with our clients is going through a really rigorous experience that we call the values mapping exercise to understand which issues matter to our investors, because so much of what we do is personalized to each specific investor. And so what we do is we create like a mission statement or, a map of what it is that people are actually prioritizing. And you'll see some issues come up more than others. You see climate is very popular. You see human rights, racial justice. But what we found is that LGBTQ plus rights is a fundamental human right. This is, this is something that so many of our clients have actually told us that they do want to prioritize. And it's also an issue that we here at the company prioritize from a personal basis. So we made it a priority early on to actually think about this issue at a systemic level, looking at the issues that are really important, like anti-discriminatory policies, as we discussed, but also looking at the additional factors like data privacy, like firearms, like these other behaviors that matter so much.
I know from a compliance perspective, you probably have to be very careful in what you can say, but can you take me into and take our audience into the way that you think about different themes and potentially new themes that you would come up with for portfolios or products?
Yeah, I mean, the themes is an interesting way to put it because, if you were to be a sustainable investor 10 years ago, 50 years ago, 100 years ago, the priorities change. Right. So in the last 3 or 4 years, we've seen issues like deforestation get a lot more popular because of the increased prevalence of wildfires. Right. Last year, we saw racial justice get a huge amount of demand from our client base, but that was something that we had prioritized since we founded the business. And so what we do is we provide additional resources into thinking about how to address these things at a systemic level by looking at how, companies are actually interacting with these issues, either making them better or either making them worse, right? So again, with an issue like LGBTQ plus rights, we're looking at, which behaviors that might not necessarily seem that obvious, but are truly systemic are actually going to support this community. With something like racial justice, again, we want to look beyond diversity and inclusion, which is very important. We want to look at the systemic issues like private prisons, like predatory lending, like environmental racism, to see which companies are truly actually going to make the situation better or worse as it pertains to the theme, per your question.
Hey, Jay, I want to just take a step back and think about the market and have your comments on the market in a bigger way. Now that we've touched on what you've been up to at Ethics since we last spoke. I'm wondering what you make of where the trade is and where the trade has been happening over the last 6 weeks or so. Our colleagues at Bloomberg News spoke to Janet Yellen yesterday, and she said that higher interest rates would be a plus for the U.S. What do you make of that?
Well, I think that, the theme that we see, whether it's in the last 4 weeks, 6 months, 6 years, is that investors are being more intentional about their investments and they are demanding more information about how their portfolio is going to be affected by either these idiosyncratic market events or just longer term themes in the economy, right? Is there going to be an increased idiosyncratic impact based on, the larger part of the portfolio, or are the companies in the portfolio going to be more impacted by an economy that is driving more towards renewable energy, more towards the systemic shift, and are people positioned correctly? So for us, it's about, having that intention with our investors to recognize that they can personalize their portfolios to potentially insulate themselves from the risks that come from an either those short-term events or those long-term events, but we're just seeing investors being more demanding of intentional portfolios that are actually going to be insulated from them, rather than being, more passive and kind of staying in traditional index investments, for example.
AJ, just in the last 20 seconds, are you at the point where you're openly communicating with companies about what they need to be pushing for internally?
So our investors are able to participate through, proxy voting, to engage with the companies that are in the portfolio, and that's a really important part of the process that we provide companies. But, we did just cross $1 billion threshold, which is very important to us and our community. But as we continue to get larger, we're going to be engaging more, especially as we have more weight and assets behind us.
Jay Littman, it is always a pleasure. Jay is co-founder and president of Ethic, approximately $1 billion in assets under management. He joins us from New York City. Well, don't go anywhere, because 10 seconds until we begin our Bloomberg Beyond the Bell. It's our cross-platform coverage of the market close. I'm going to be joined by my colleagues from Bloomberg Television. This is Bloomberg.
Cross-platform coverage of the U.S. market close starts right now.
And right now, we are 2 minutes away from the end of the trading day. Romaine Bostick, Taylor Riggs, Caroline Hyde off the boat on the shores here in America, counting you down to the closing bell, and here to help take us beyond the bell. Our global simulcast, Tim Stenovic, bringing together our Bloomberg Television, radio, and YouTube audiences worldwide, Tim, to parse the most crucial moments of the trading day. A big mouthful there, Tim. What have you been watching?
Well, first of all, I'm just happy Caroline's back here in the U.S. Welcome back, Caroline. Look, a mixed day, guys, as we've been talking about all day, but a late day rally for the NASDAQ starting a little bit after 2 p.m. Wall Street time. The Russell 2000, though, it's the standout, higher by more than 1.4% right now. I got to tell you, a 15% rally in AMC, that doesn't hurt. The biggest component of the Russell. Also a surge in GameStop, helping the Russell outperform the other major indices, Caroline.
Who'd have thought it? You take a week off and you're still talking about meme stocks, but clearly it's where it's at. We had a slight, pause in activity for Friday. Those share prices came tumbling down, but AMC back up, as you mentioned. Clover Health up some 30%. Meme is where it's at, but it's interesting, Taylor, that we saw the NASDAQ push away from some of those lows of the days. We were questioning whether tax rates were going to be impacting some of these big tech stocks.
It was taxes. It's also the NASDAQ Biotech Index as well, Caroline.
Yes.
You talk about some of the biggest movers. Kill me if you want. I'll be the one that brings it back to fundamentals if we want. As we take a look at shares of Biogen, they're still up about 40%. Just an incredible interview that we had for our radio audience as well, talking about sort of being a game changer for the company. The analyst, Truist, with an 846 price target, certainly agrees.
Yeah, and keep an eye on the biotech space. In addition to Biogen, of course, you had that big oncology conference. This tends to be an interesting catalyst here for the year for a lot of these biotech stocks. But as we get the closing bell here, the S&P 500 looked like it's going to end the day relatively unchanged. Right now, it's down about less than 0.1%. It's take a while for these numbers to settle, but 4,226, that's where we stand right now. 13,881 on the NASDAQ Composite, up 0.5%. The Dow Jones Industrial Average down about 0.4%, but the real outperformer here on the day, that's going to be the Russell 2000, 2,319. That's up, Taylor, about 1.4%.
It is. It's the star outperformer. One of the statistics that caught my eye, Biogen just leaped from a 43 to a $65 billion market cap.
That was theatrical.
I know.
For our radio audience, we suddenly had Taylor in the dark, and she'd been bathed in light, finally.
Bathed in light. We see
like
market
David Mamet
caps double for some of those companies like Biogen, of course, that we're talking about. And that really leads us into our sectors, Romaine, with pharma, of course, biotech, some of the big outperformers for the radio audience. You're up 1.2% on a sector level, but then a little bit defensive with real estate. And then, of course, media, as we're taking a look perhaps at some of the big tech movers, some of the more defensive plays that we continue to see. For the losers, though, you have to see it's sort of classic, risk on, and then it's food and staples and insurance and, professional services. So remain really range-bound, and you really get that tone again today.
All right, well, not range-bound on the day is Biogen. That's the biggest percentage mover out there on the day of any size, up about 38%, 395.85. Eli Lilly and some of the other names also getting a nice little bid here. The biggest volume mover, once again, for I believe something now, the 7th straight day, that's going to be AMC. Those shares higher, 14.8%, $55, is where we stand right now. 340 million shares swapping hands. Peloton also getting the bid here, Tim, up about 7% on the day.
Yeah, Romaine, each day I come in and I think to myself, is this going to be the day that AMC stops going up? Perhaps it stops being the most actively traded stock in terms of volume. That day, obviously not today.
Tim, we call them stonks.
Stonks, excuse me. Yeah, and to the moon, which, by the way, we're going to be talking talking about in just a few minutes. I want to talk about Tesla, though. It finished the day higher by more than 1%. It was down for much of the day, shares falling as much as 2.7%. This after Elon Musk said that the Model S Plaid Plus sedan was canceled. This was a really fast version of the car with a longer range, but Musk said on Twitter that but it's not going to exist.
Okay.
Yeah. Well, like many things, Romaine, that we hear.
All right. Faith in Elon.
Yeah, faith in Elon. And, this on Twitter, like many other things. I'm also keeping an eye on Progressive, finishing the day down after Morgan Stanley cut the stock to underweight. Amazon finishing the day today by actually I should say down by just about 0.2%. And then Apple finishing the day just in positive territory. The company giving its worldwide developers.
Are you allowed to have green for the losers?
Yeah, what's going on here?
I know. You guys caught me. Okay, so here's the deal. All right, here's the deal. Okay, so we're on a day like today when the NASDAQ has this like late day rally, a lot of the stocks that I chose as decliners, they ended up moving higher on the day. So I'm just going to go ahead and call them movers. I made sort of a game time decision.
Tearing up that script, Tim.
Ripping the script.
You're going to stick to our game plan because I'm going to go from movers to shakers across the board. We're going to be looking in at across asset look right now. GMM, global macro
back
movers.
in the US and already coming up with ideas.
Well, sometimes you just gotta try and recreate some of the narrative when you're seeing the dollar off by 0.2%, guys. I'm looking at the foreign currency movers at the moment. This is a story of dollar weakness as we aren't worrying about Janet Yellen talking about rates potentially going higher, inflation potentially being transitory. We're still sticking to a dollar weaker story. We see the Japanese yen up by 0.2%. The Norwegian krone was at the top performer of your main currencies, up 5-10%. That, as we see the US dollar still holding near $70. I'm looking at WTI crude when you look across at commodities, $69.23. We had to come off of that psychological level of $70. Just came down by 0.5% on WTI crude. But really, the story of oil up 40% year to date. This is really the crescendo that we see continuing in the oil market. But maybe just a pause for breath as we see stocks calm a little bit today and risk abate a little bit, still off by 2.4%. We're seeing interesting moves in iron ore in China as we see suddenly maybe demand push back against some of that significant price appreciation that we've seen across the commodities and the metals. Sovereign bonds, Taylor, I'm looking across the world and yields pushing higher a little bit in Europe.
Yeah, just a little bit as well here in the U.S., Caroline. You're up about 1 basis point across the curve and really coming off of a week last week where bonds were catching a bit as we were digesting perhaps maybe not higher growth, higher inflation after the jobs report. And then over the weekend, you get comments from Treasury Secretary Janet Yellen, and of course, saying that she may not think that higher yields are bad. And this time around, bond markets take it in stride as we're up now to a 157, Romaine. Big numbers.
Yeah, 157.
On the 10-year.
Absolutely. But I mean, it gets you bring up Yellen, and of course, a lot of talk right now is about the inflation debate, whether you believe it is persistent or whether it's transitory, and how the reaction function of the Fed is going to be. We can continue to hear out of the Fed and out of other members of the Biden administration that they are comfortable here with the whole idea of letting this economy run hot. And the market, I guess, for the most part, seems to be buying into it, Tim.
Yeah, it's certainly the case, Romaine. And look, we hear it from the Federal Reserve every time we hear somebody from the Federal Reserve. The metric that the Federal Reserve is watching, it has to do with jobs and getting those more than 7 million Americans back to work and getting that unemployment rate down. Yeah. And they are okay with running the economy hot in order to do that.
Of course, I mean, not only was Yellen talking about where rates are going, where inflation is going, and that was in a scoop by Bloomberg, as she was, of course, delivering her speech post G7. What she was there in London to do was to deliver this, well, bipartisan approval from across G7 at least, of higher taxes. Of course, the key thing is now Yellen has to sell that story of higher corporate taxes here in the United States, and also, Taylor, well, to the G20, to the OECD as well.
And I believe, another 140 countries, you need a majority of those. I think Ireland's already said, yeah, we might pass on that, given we're at, 10 or 12%. They're not sure they would even go up to 15%. So, Romaine, certainly, I think a lot of hurdles that need to be overcome. I think you've already had some U.S. lawmakers here speaking out saying we're not quite sure of this. Definitely don't count this in as a done deal. Facebook, though, Mark Zuckerberg coming out and saying that we would support this given the clarity it provides knowing that it might raise our taxes as well.
I would like to point out, earlier today I interviewed Matthias Cormann, of course, the OECD General Secretary, on the other show that I host without you two. And the interesting thing that he had to talk about, he talked about this tax situation, and really they've been looking at this. Isn't just something they sort of pulled out of a hat over the last few months. They've really been studying this issue now for several years, and they've really gotten the empirical data to show the net effect of the lack of these tax payments and what it means for the economies here. So they seem to be very serious about pursuing this. Whether they can get all the 130 plus members of the OECD nations on board remains to be seen here.
Kudos to Romain, who does double time, starting your morning off 7 till 9 a.m. He does a couple of hours anchoring in the morning. He's just like living on caffeine as we speak right now. Caffeine, and as I would call them, biscuits, British biscuits.
She brought us biscuits today, Tim. Did you know that? All the way back from the UK.
I'm going to be by there as soon as I'm off air.
I've saved you some.
Those are cookies, by the way.
Yeah, no, tomatoes, that's the issue with the UK-US, but a special relationship nevertheless. I'm looking at Stitch Fix, giving us some special numbers. Third quarter net revenue currently at 535 million. That's a beat. We're seeing Stitch Fix really move higher after hours as we see the fourth quarter net revenue. All accessories. That's your bow ties, hey? 540 million to 550 million is the expectations for fourth quarter net revenue, Taylor. That is ahead of expectations, and their adjusted EBITDA expectation for fourth quarter, 15 to 20 million. The estimate was for far less than that. We rally hard.
When analysts really looking, of course, to extend some of the cycle times and, of course, highlighting everything that we've really been hearing from retailers across, whether you're online or traditional brick and mortar, about that pent-up demand for not only Romain's accessories, but general apparel as well. And so you're certainly seeing that come through the numbers, and we will keep our keen eye, as Caroline says, on some of those cycle times as they extend.
There is no way, I might add, that Romain gets that beautiful bow tie from Stitch Fix. I have a feeling.
Yeah,
I got a guy.
I'm gonna go, guys. I'm gonna get some cookies when we're done. Some biscuits.
Come on by.
I'll be by. Okay.
They're biscuits.
Well, that's gonna do it for our Bloomberg Beyond the Bell cross-platform coverage of the market close with my colleagues from Bloomberg Television. We'll be back same time tomorrow and same place. This is Bloomberg.
This is Bloomberg Business Week with Carol Masser and Bloomberg Quick Takes Tim Stenovic on Bloomberg Radio.
Well, there you have it. Markets close for the trading day on this Monday, July 7th. Keeping an eye on Stitch Fix. Shares absolutely surging in after-hours trading higher by more than 19% right now. That after the company said that fourth quarter net revenue 540 million to 550 million, beating estimates. Let's get a check on world and national news with Nancy Lyons in D.C. Hey, Nance.
Hey, Tim. The U.S. government has seized millions of dollars in a cryptocurrency payment that was made to hackers after a cyber attack that caused the operator of the nation's largest fuel pipeline to halt its operations last month. This is FBI Deputy Director Paul Abate.
Today, the FBI successfully seized criminal proceeds from a Bitcoin wallet that dark-side ransomware actors used to collect a cyber ransom payment from a victim.
Abate says the FBI has found more than 90 companies that have been victimized by the dark side hacker group believed to be based in Russia. Justice Department officials are encouraging all businesses to take steps to protect their IT operations because these hackers, they say, pose a clear and present danger. The Food and Drug Administration has approved Biogen's Aduhelm therapy, the first treatment in years to address Alzheimer's disease. Biogen CEO Michel Vounatsos talked with Bloomberg about the breakthrough in which the amyloid plaques that clog the brain are reduced.
We are able to penetrate the brain and gradually remove the plaque, and this is critical.
Vounatsos says he considers today's approval an important day for the patient and caregivers. Amyloid's role, though, in Alzheimer's is still being debated, but numerous other drugs that target it are being developed by other drug companies. Vice President Kamala Harris is in Guatemala, meeting with leaders there to discuss ways to improve conditions that are sending Guatemalans to the U.S. She urged them not to make the dangerous trek. She'll be meeting with Mexico's president tomorrow. Global news 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries.
Thanks so much for that, Nancy. Tim Stenevec in the Bloomberg Interactive Brokers studios. I'm joined now by Charlie Pellet here in New York City as well. Charlie, New York City Mayor Bill de Blasio is backing the Washington Square curfew, this amid some political backlash.
Indeed, and worth pointing out, too, for our listeners who might be listening to us across the country, indeed across the globe, New York has a number of fantastic parks. Central Park, obviously the biggest and best known, but I tell you, if you're in Greenwich Village, Washington Square Park is the place to go and hang out and visit on the weekend. But there's been an issue. Protests, really not clear what the latest protests were about, but Mayor de Blasio wants everybody out of the park by 10 o'clock at night. Some suggestion that the protesters have been protesting against the curfew, and over the weekend they had to make arrests, roughly 24 people taken into custody because of the clashes as a result of breaking the curfew, which is now 10 o'clock.
And Charlie, for those people who are not following New York City politics, we are in the midst of a mayoral election, and there are several candidates vying for the mayoral position. Bill de Blasio is not eligible to run for re-election, is not running for re-election, but political candidates and mayoral hopefuls have weighed in on this, including Andrew Yang. He was critical of the city's police response to the protests. He tweeted that Washington Square Park has always been a place to gather and enjoy summer nights. Sending officers in riot gear and militarizing a public park should never be the answer.
And indeed, too, and again, just to add a little more context as to where this park is exactly. Greenwich Village, one of New York City's most storied neighborhoods, but too, NYU, its campus is really all the way around Washington Square Park. So it is a very popular park with young people, students coming to hang out during the summer months.
Okay, but Charlie, you and I live in Brooklyn, right? And our park that we go to.
It was mobbed over the weekend.
It was Prospect Park? You were there?
I was there playing Frisbee with my son in 90-degree heat. Yes, it was very hot.
So if you come to visit New York City and Central Park's a little too crowded, head on out to Prospect Park. You might see Charlie playing a little Frisbee with his son. This is Bloomberg Business Week, and this is Bloomberg Radio.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
Shares surging right now by 20% based in San Francisco. Stitch Fix forecasting net revenue for the fourth quarter. That guidance beating the average analyst estimate. Also, Marvel Technology reporting net revenue for the first quarter. That beat the average analyst estimate. It was a mixed day on Wall Street. We had the Dow, the S&P, both trading lower today. Nasdaq did advance. Most stocks falling amid inflation and tax concerns. S&P down 3, a drop of 1/10 of 1%. The Dow down 126 down 4/10. Nasdaq up 67, gain of 5/10. 10-year yield 1.56%. Gold up 4/10 to $18.99 the ounce. And West Texas Intermediate crude down 5/10, 69.24 a barrel on WTI. Biogen today getting approval for that Alzheimer's drug, surging 38.3%. I'm Charlie Pellet. It's a Bloomberg Business Flash.
It certainly is. Thank you so much, Charlie Pellet. Well, today is the annual event, Apple's 2021 Worldwide Developer Conference, WWDC. For those in the know, like our own Mark Gurman, technology reporter at Bloomberg News, who joins us now on the phone from our LA bureau. Mark, you and I got to speak earlier in the day before the keynotes began at WWDC today. You did not anticipate any big surprises. I get to follow up with you now. Any big surprises?
What do you think? Of course not, right? We usually get it right here. So, yeah, this was an update with lots of iterative changes across the board. We saw what I consider to be the most minor update to the Apple Watch software since the device launched 6 years ago. The iPad, I actually have the new version with the new software in front of me right now. It got widgets for the first time on the home screen.
Okay, so explain what those are for those people who don't know.
Widgets, dynamic information. So in front of me, I see some stock tickers. I see my upcoming calendar appointments. I see the time in New York, the weather, my email. I see some photos here, some that I don't necessarily like, pinned to my home screen so you can get information more quickly. You're also seeing a new Mac OS update that better integrates the iPad and the Mac. So what you can do now is you can use your MacBook keyboard and trackpad to sort of control your iPad display. So little changes here and there, extraordinarily iterative. No new hardware, no new operating systems. More of the same, I'd say, for the time being.
What about, Mark, with Apple's changes to FaceTime that it unveiled today? Nico Grant wrote on the live blog that Apple took aim at Zoom and Google Meet with changes to FaceTime, and that's one thing that I've thought a lot about over the last year, because as these companies, including Google, including Zoom, have built on Zoom and Hangouts, Apple hasn't really had that product available in a similar way.
Yes, you keep reminding me about the FaceTime update. So they're now adding
We're having a little bit of a problem hearing our own Mark Gurman, who's technology reporter at Bloomberg News, joining us on the phone from Los Angeles. Our team is going to try to get him back. In the meantime, I can share with you some of the updates, as Mark called them, extremely iterative, from today's Worldwide Developer Conference. The company announcing a change to FaceTime that can open FaceTime links and improvements to image and sound quality. Mark, do we have you back?
Yes, you do.
Go ahead. You were talking about maybe we should have done this on FaceTime.
Maybe we should have.
Yeah.
So FaceTime for the first time is getting the ability to schedule calls, integrate with your calendar, and what you can do is you can set up a web link. So let's say you're talking to someone or want to talk to someone over FaceTime that does not have an Apple device. You can now send them a link. They can access it on Windows. They can access it on the web. They can access it, of course, now on Android too. Better video and audio calling support, but I think my favorite new feature is SharePlay. So, for example, you can now do screen sharing. You can use an app together over FaceTime. You can watch a video, listen to music. So I think that's going to be pretty nifty as well. Wouldn't these features have been great a year ago, right?
Yeah, they would.
These are features that they're preparing for the, God forbid, the next pandemic.
Yeah, I mean, look, we do talk to experts who say there will be one, but fingers crossed there isn't one. But you're absolutely right. I mean, these changes are big to FaceTime, and it makes me ask the question to to you about this being an enterprise solution or this being a solution meant for the consumer? Because I think that in the enterprise space, Zoom and Google Hangouts, Meet has really ruled them. Not to mention Cisco and among others.
Yeah, I think you're going to see enterprises use these features, but they're clearly geared towards consumers. I think this FaceTime stuff is fantastic. Just about a year late. Some of the health stuff is interesting as well. Some of the privacy changes. You'll now get a menu in the iPad and iPhone and Mac actually to tell you what kind of data has been collected by the third-party apps on your device over the last week. And I think that's going to be pretty nifty. And I think for the privacy-conscious consumers here, I think they're going to really, enjoy that.
Hey, Mark, can you talk a little more about the privacy when it comes to foreign Wi-Fi networks and what Apple announced today?
So they're adding new features to the Safari web browser as well as Mail to sort of better hide your IP address. Oftentimes you'll get emails from people that have to remotely load, images and such, and using that they can access your IP and other information potentially. So this is a bit of a blockade to that.
When you think about Apple's big ambitions, and I'm talking 5, 10 years, 15 years down the line, stuff that you have been reporting on for years, what did you see today that alludes to those?
Nothing.
Really?
Absolutely nothing. Yeah, there was nothing here that has any long-term...
Nothing about health?
Potential. Well, health, they're obviously going to be adding new health features. You'll see blood sugar tracking in the Apple Watch in a few years. You'll see more health devices and new health sensors. But, nothing here I think really changes the game for health. What we got today were a few things. You got better explanation of your cholesterol data. And then we have better information on your walking, so it'll be able to better track your gait and other walking data as well, but nothing I think is significant as Research Kit and a few other features that they launched in recent years.
Hey, Mark, before we let you go, this was another virtual event, right?
Another virtual event, and hopefully the last from Apple.
So you think that back in September when we expect to see new iPhones, as we traditionally do, we'll be back in person, or you'll be there in person?
I don't know. What I can tell you is Apple employees are expected back in the office in September, so it would, ring a little hollow if they expected employees back in the office but still stuck to virtual events.
Yeah, you make a really, really good point. Okay, final question. Were you surprised by anything? It's hard to surprise Mark Gurman, by the way.
Nothing particularly surprising. I guess the Zoom stuff was a little bit more extensive than we thought, but overall I think it was fair.
Mark Gurman is technology reporter at Bloomberg News. Mark, it is always great to chat with you, especially when we get to talk Apple, one of my favorite things to talk about. Mark joining us on the phone from the LA Bureau, talking all about WWDC 2021. We got much more coming up in just a few minutes. This is Bloomberg Radio, and this is Bloomberg.
Broadcasting live from the Bloomberg Interactive Broker Studio in New York. Bloomberg 1130 to Washington, D.C. Bloomberg 99.1 to Boston. Bloomberg 106.1 to San Francisco. Bloomberg 960 to the country. Sirius XM Channel 119. And around the globe, the Bloomberg Business app and BloombergRadio.com. This is Bloomberg Business Week.
It's Bloomberg Business Week, and it's Tim Stenevec live in the Interactive Brokers Studios in New York. Coming up in just a few minutes, we're going to be joined by Peter Quigley, President and CEO of Kelly. He's going to join us to talk all about how Kelly, formerly known as Kelly Services, is learning about education, outsourcing and consulting, and can tell us about professional and industrial and employment and how the company is thinking about the economy right now. In the meantime, let's get a check of the trading day with Charlie Pellet.
Thank you very much. Lots of earnings after the bell. Stitch Fix out of San Francisco, the standout at forecast net revenue for the fourth quarter, and that guidance did beat the average analyst estimate. Shares up after hours by 15%. Marvel Technology reporting net revenue for the first quarter that beat analyst estimates. Shares up by about 2.5%. Another big day for AMC Entertainment Holdings, up for the first day in three amid a broader advance in meme stocks. And as regulators warn, they are monitoring the frenzied trading in the group of shares for any signs of market manipulation. AMC up today by 14.8%. Turned out to be a mixed session. We had the Dow lower by 126 points, down by about 0.4%. S&P was lower by about 0.1%, down by about 3 points, while NASDAQ surged 67, up by 0.5%. Biogen has received approval for its controversial Alzheimer's disease therapy. Shares surged today by 38.3%. Most equities declined. Treasury yields rose as investors weighed inflation risks and the potential impact of a minimum corporate tax that could enable foreign governments to impose levies on big American companies. As for the market backdrop, Winnie Caesar is head of credit strategy at Wells Fargo Securities.
Having some certainty, some clarity around what policy is going to be really gives investors confidence in how they're going to put cash to work. We've been underweight technology and investment grade all year, in part because valuations are just so absolutely low.
And today we did see Tesla shares moving lower today. Tesla declined after the electric car maker called off plans to build a longer-range version of its high-end sedan. It was a mixed day again, recapping with the S&P down 3, it dropped today at just about 0.1%. I'm Charlie Pellet. That's Bloomberg Business Flash.
It certainly is. Thank you so much, Charlie Pellet. Well, we got the most recent view of jobs, at least here in the U.S., on Friday when we learned that the U.S. economy added 559,000 jobs in May, or I should say recovered those jobs after they had been lost during the pandemic. That is lower than the 675,000 economists who were surveyed by Bloomberg expected. Now, at the same time, we continue to hear from executives of large and small companies about the challenges that they have finding and attracting workers. Well, let's get right to it with Peter Quigley, who's president and CEO of Kelly. Peter, he joined us on the phone from Michigan. Peter, I'm really interested to hear from you because Kelly's a firm that helps provide staffing. Where you're seeing demand and really what you're seeing at this point in the pandemic right now.
Yeah, good afternoon, Tim. Good to be with you. So we have 5 business segments: professional and industrial, science, engineering, and technology, education, outsourcing, and international. And we're seeing demand for staffing and our other workforce solutions across the board. And that's been the case for the past 6 months, and demand is significant. The challenge we have is not so much the demand as much as the supply of talent.
Okay, so talk a little bit about that. Why aren't they meeting up?
Well, anytime there is a mismatch between the supply and demand of talent, you have to take a look at what the underlying reasons are. One of the fundamental reasons that always exists is a mismatch between what workers expect to be paid and what employers are willing to pay. But in this environment, there are at least 3 other factors that are contributing to the mismatch.
Okay.
One is that people still have health concerns due to COVID. Individuals, particularly women, have caregiving responsibilities, whether it's in home schooling or taking care of an elderly parent. And then finally, enhanced unemployment benefits. And while we can debate whether or not that last one is contributing more or less than the other two, the fact is the combination of those three on top of the compensation question is clearly having a depressive effect on the supply of talent.
Well, Peter, let's focus on the compensation question because you have some interesting insight, of course, given what Kelly does into supply and demand. What is the magic number? And I know it changes based on industry, but how much higher and how much more do companies have to pay right now in order to attract talent than they did, let's say, at this point in 2019?
Yeah, well, the fact is that the wage increases that we've seen in the past quarter or two have been significant in terms of outpacing prior periods of increases. And I'm not talking about just a little bit higher. I'm talking like 2 or 3x greater. So companies are beginning to come around to realize that they've got to pay higher wages if they're going to get people off the sidelines. Ultimately, we believe that in the back half of the year, as schools reopen, as more people get vaccinated and the enhanced benefits go away, we will see more talent supply. But the reality is that companies who don't pay a competitive wage are struggling mightily with finding enough people to fill the jobs, as indicated by the record number of job openings in March and the relatively moderate job growth we saw in March and April.
So, Peter, does that tell you that wage inflation is going to be a factor?
I think so. If you look at the reservation wage or the minimum compensation workers require, it's up 19% for those without a college degree in March as compared to November 2019. And that equates to $9,000–$10,000 a year. So that's not an insignificant change in the compensation profile and likely to have some long-standing impact on the economy.
Hey, Peter, before we let you go, and we're going to come back with you in just a few minutes, we're going to do some news. Education, outsourcing, and consulting, science, engineering, telecom, and technology, international, professional, and industrial. These are the 5 specialty businesses that Kelly is separated into. I'm wondering if one of those is outperforming the others right now.
Well, our science, engineering, and technology business, particularly in life sciences and clinical research, we saw a significant increase in that business last year, and we don't see any signs of demand in that falling off, as for reasons that you can imagine, given the pandemic and other demands on science. So life sciences is clearly outperforming. But even our education business is coming back.
Okay, we're going to talk more about that in just a few minutes. In the meantime, we're going to do some news. This is Peter Quigley, President and CEO of Kelly, joining us on the phone from Michigan. In the meantime, let's get a check on the latest world and national news with Nancy Lyons in D.C. Hey, Nance.
Hey, Tim. The FDA is giving its approval for the first new drug for Alzheimer's disease in nearly 20 years. It's a drug from Biogen that has undergone extensive trials with limited success. But Biogen CEO Michel Vounatsos tells Bloomberg it is a major breakthrough.
Today, it's a new start. Today, we're opening a new chapter, and I'm delighted to be in a position, to have the honor and the responsibility to do it well.
Vounatsos says the drug Aduhelm works by removing the harmful amyloid proteins in the brain. Current therapies help with symptoms but do not alleviate the underlying damage. There was a flurry of decisions today from the Supreme Court. We get more on that from Bloomberg's Nathan Hager.
In a unanimous decision, the justices said a Salvadoran couple who escaped their country after a series of earthquakes in 2001 can't seek permanent residency just because they're protected under temporary protected status. The ruling could affect thousands covered by that program, which protects immigrants whose home countries are in crisis. The Supreme Court also refused to question the all-male draft, saying Congress should have more time to revisit the issue now that women are allowed in combat. And they turned away a bid to weaken public sector unions from an Ohio high school teacher who claimed a First Amendment right not to join a union. In Washington, I'm Nathan Hager, Bloomberg Radio.
Scientists say the annual peak of heat-trapping carbon dioxide has reached another dangerous milestone. It's 50% higher than when the industrial age began. And the National Oceanic and Atmospheric Association says the average rate of increase is faster than ever. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries.
Thanks so much for that update, Nancy. Tim Stenevec in the Interactive Brokers studios. This is Bloomberg Business Week. I'm joined now by Charlie Pellet. Charlie, I'm going to try this again. Another day, another SPAC.
Indeed, we're talking about Dave. That's a banking startup that's been backed by investors, including Mark Cuban, Capital One Financial. They've agreed to go public in a deal with a blank check firm that values the company at $4 billion. Our Bloomberg News story based on reporting by our Kathleen Chiglinski.
So Dave launched back in 2017. The goal for Dave was to help customers avoid overdraft fees. That's an effort that it says has led customers to circumvent nearly $1 billion in those charges. If we think back to just a couple of weeks ago, such overdraft fees faced serious scrutiny from lawmakers during hearings with bank executives, with House Financial Services Committee Chairwoman Maxine Waters chiding firms for raking in, quote, billions in overdraft fees last year during the pandemic.
Indeed, and that certainly is one interesting component to the story. The other is just the fact that this is the latest fintech to go public through a merger with a SPAC. Acorns Grow, an investing startup, agreed in May to go public through that route. Mortgage real estate startup Better Holdco announced an agreement for a merger with a SPAC earlier that month.
One thing that we've seen over the last year, Charlie, has been the rise of fintech companies. And I don't even want to say over the last year because fintech has been huge since the days of PayPal. But I think one thing that we've seen really is the idea of these neobanks or companies that aren't necessarily traditional banks, but are fintech companies and have banking partners. And what they're doing is they're going after those pain points that consumers have, as Catherine Chiglinski outlines in her article. Overdraft fees, for example. You have a host of other ones as well that are trying to reach those customers that haven't really felt served by other banks.
Indeed, that sums it up so nicely, Tim, taking the pain point out of all of this. And I think about whether it's sending money overseas or trying to do simple transactions, and basically consumers, particularly those enabled with smartphones, are looking for life to be a little better, a little quicker, a little easier, thanks to technology.
All right, we're going to have much more on fintech throughout the week this week. Check out Kat's story available on the Bloomberg. This is Bloomberg Business Week, and this is Bloomberg.
hits, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
World headquarters, I'm Charlie Pellet. Developing story, according to a filing, Macy's says Citibank has informed the retailer that it is terminating their credit card pact. Earnings after the bell. Stitch Fix out of San Francisco up now by 15%. It forecasts net revenue for the fourth quarter that beat the average analyst estimate. Marvel Technology shares now up by 3.5%. It reported net revenue for the first quarter that beat the average analyst estimate. Also out after the closing bell, Vail Resorts, ticker on that one, MTN as in mountain. It reported net revenue for the third quarter that met the average analyst estimate. The outlook, however, disappointed. Shares of Vail Resorts now trading a little change. Most stocks declined today. Treasury yields rose as investors weighed inflation risks and the potential impact of a minimum corporate tax that could enable foreign governments to impose levies on big American companies. S&P down 3, down less than 0.1%. The Dow down 126, down 0.4%. NASDAQ up 67, up 0.5. 10-year yield 1.56%. Gold up 0.4%, 18.99 the ounce. And West Texas Intermediate crude down 0.5%, 69.25 a barrel. I'm Charlie Pellet. That is a Bloomberg Business Flash.
Thank you so much for that update, Charlie Pellet. Well, let's get right back to it with Peter Quigley, President and CEO of the staffing services firm Kelly, joins us on the phone from Michigan. Peter, before we went to the break, you were talking about how the science, engineering, telecom, and technology segment of your business is just outperforming the others. I want to focus now on education because you did mention, and this is something that we've heard from economists, that we've heard from the Federal Reserve, but the fact that childcare remains an issue here in the United States in keeping so many families, and especially women in the United States, from going back to work because they do not have the schools reopened, or they are scared to send their kids back to school. What can you tell us about what you're seeing in the education segment of your business?
Well, Tim, anecdotally, we can confirm that when schools are open for in-class instruction, there is an impact on the available supply of talent. So clearly, the 3 million women who have left the workforce during this pandemic revealed that in order for the economy to be fully back to normal, we're going to have to get schools reopened and get as many children as possible back into the classroom safely.
What about the demand that you're seeing as schools reopen?
Well, the demand for instructors is significant as schools reopen. There has been a historic number of teachers leaving the profession during the pandemic due to either healthcare concerns or accelerating their retirement dates. And we think the demand for instruction for both K through 12, we're the largest provider of substitute teachers in the country, but also for early childhood as well as tutoring. In March, we launched a tutoring product because we think that parents and school districts are going to be looking for ways to close the COVID-19 gap year that we're all aware of because of the inadequacy of remote learning for certain portions of our school-aged children.
Yeah, it's something that we're seeing here in New York City, certainly among the most read on the Bloomberg terminal today was an article that talks about summer school and the way that many students will have to go to summer school as a result of what happened over the last year plus. Peter, I want to get your thoughts on what you're seeing around the world because you do have customers in outside of the United States. What are you seeing with the different pace of recoveries and getting past the pandemic?
Well, clearly the European segment of the economy is coming back slower than what we've seen in the U.S., and that's due to the sort of sporadic opening and closings, a lack of uptake on the vaccine. Asia is surprisingly resilient given the pandemic, even though there have been additional spikes in places like Thailand. The demand for staffing and other solutions that we provide has held up reasonably well, given the fact that the pandemic hit that area of the world first. But we think it's going to be an uneven recovery, Tim. There's no question that the U.S. and China are probably going to lead the recovery, with other geographies coming back in uneven ways.
What about when it comes to the different relationships that employees are expecting from their employers right now? We talk a lot about burnout here. And indeed, that's something that we've seen. And we've also seen over the last 14 months the way that employees are leaving their firms to change careers, to go to new firms, and they're thinking differently about their own relationship with work. What are you seeing, Peter?
Well, Tim, if you take some of the survey data as reliable, it's eye-opening. There's no question burnout is an issue. A staggering 1 in 4 employees have indicated they plan to leave their employer after the pandemic subsides. That's according to a survey from Prudential. And it's even higher for millennials. And I think the question for employers is this a temporary setback where employees are reconsidering their work-life balance, or is this a structural reset where you're actually going to have people who are not coming back into the workforce, which is just going to compound the talent supply issue that I mentioned earlier?
Are you inside of Kelly having a hard time attracting and retaining employees?
We actually, for our full-time workforce, we actually have been we benefited from the fact that we went to a remote option for our full-time workforce about 3 years ago. So we were not only well prepared for the pandemic, but
why did you do that? That was before we were talking about COVID-19.
Well, we thought in terms of attracting particularly millennials and achieving an appropriate work-life balance that we didn't need everybody in the headquarters building. And we recently, actually last March, we sold our headquarters facility in a sale-leaseback arrangement that allows us to put that capital to different use.
Yeah, here we are just a few years after you guys made that decision. Was it the right move?
We think so. We think that notwithstanding the pandemic, we thought that the level of employee engagement and our retention rates were very strong. In talking to our employees, they indicated that was one of the more attractive aspects of their work, and we think the pandemic has revealed that not only do employees look for that as a possible benefit when they come back to work, but also employers have recognized that work outcome is likely more important than work location.
So with your non-full-time employees, are you seeing the firms that go to you to hire them for their staffing needs, are they doing a hybrid work environment right now?
Where they can. So in life sciences, for example, there are some jobs that you have to be in on premise to do, but in IT, for example, a lot of our technology professionals were working remotely last March and continue to. And I think our customers generally reflect the businesses at large in the U.S., that they are likely to come back in some form of hybrid, maybe not everybody all the time working remotely, but at least offering some percentage of their working population that option sometime during the week.
Peter Quigley, thank you so much for taking the time and for joining us on Bloomberg Business Week. Really great to have you on the show. Peter Quigley is